Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be breaking down the action from today's market session. We've got a lot to cover on April 14th, 2026, with stocks rallying hard, geopolitical tensions easing a bit, and some big moves in tech and energy. So let's dive right in and see what's driving the markets for us long-term investors while keeping an eye on those short-term swings. First up, let's talk about the major indexes because they're painting a pretty bullish picture today. The S&P 500 climbed over 1%, reclaiming levels we haven't seen since before the Iran conflict rattled markets. The Nasdaq led the charge with an even stronger gain of nearly 2%, fueled by tech heavyweights. Meanwhile, the Dow Jones added a solid 0.66%, and small caps in the Russell 2000 weren't far behind with a 1.3% pop. What's driving this? Well, renewed hopes of diplomatic progress with Iran have calmed nerves, pushing stocks back toward record highs. For us long-term folks, this resilience signals that the market is shrugging off geopolitical noise and focusing on fundamentals, something to keep in mind as we build our portfolios. Now, let's zoom out to the bigger economic picture. Investors seem cautiously optimistic despite the ongoing Middle East tensions. Reports suggest progress in U.S.-Iran talks, which sent oil prices tumbling nearly 7% today, a big relief for inflation fears. But here's a heads up. The IMF is warning that a prolonged conflict could still expose financial vulnerabilities globally. Plus, there's chatter about a potential $300 billion liquidity drain from Treasury accounts that could tighten conditions and pressure this rally. As long-term investors, these macro risks remind us to stay diversified and not get too caught up in short-term euphoria. Turning to the day's big winners, tech stocks are stealing the show. Among large caps, Intel surged almost 5%, riding the wave of semiconductor strength, while advanced micro devices also posted a solid gain of over 3%. Lumentum Holdings was a standout, rocketing more than 8%. Talk about momentum. These moves highlight the ongoing appetite for tech, especially as AI and innovation themes keep driving interest. For us long-term players, this sector's strength is a reminder to have exposure to growth areas, even if we're not chasing every daily spike. On the flip side, not everyone's celebrating. Tesla took a hit, dropping over 5% today, likely on concerns around demand or delivery numbers. Other large-cap losers included ASML and GE Aerospace, both down more than 3%. These pullbacks can sting in the short term, but for us focused on the long haul, they might signal buying opportunities if the fundamentals remain intact. Remember, volatility is just part of the game. Don't let it shake your core strategy. Looking at the market movers, Nvidia continues to be a name to watch, edging up nearly 1% with massive trading volume. Amazon, on the other hand, saw a slight dip, but the big news is their $11.6 billion deal to acquire Globalstar, aiming to challenge Starlink in the satellite internet space. That's a bold, long-term play in a cutting-edge field. Meanwhile, Netflix gained over 3%, showing strength in streaming. These movers remind us that innovation and strategic acquisitions can shape industries for years, something to factor into our portfolio decisions. Speaking of volume, the most active stocks today included Nvidia and Tesla. No surprise there, with billions of shares changing hands. Intel also saw heavy trading, likely tied to its big gain. These high-volume names often reflect where investor sentiment is hottest, but for us long-term investors, volume spikes are more of a curiosity than a call to action unless paired with a compelling story. Let's shift gears to earnings season, which is kicking off and will be a major driver in the coming days. This week, we've got heavyweights like BlackRock and Delta Airlines reporting, alongside names like CarMax and Levi Strauss. Early reports are mixed. Wells Fargo missed expectations today, dragging its stock down, while Johnson & Johnson beat estimates and raised their full-year outlook, giving their shares a nice boost. Earnings are a critical litmus test for market momentum, and for us long-term investors, they're a chance to gauge the health of our holdings beyond daily price noise. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your investments. Over the past week, some large caps have been on fire. Garmin led with a massive 21% jump, while Lumentum Holdings and AppLovin both gained around 15%. Shopify and Occidental Petroleum also posted double-digit gains. These short-term surges can be tempting, but as long-term investors, we need to ask, are these moves backed by sustainable growth or just market hype? That's the lens to use here. On the other end, the past week saw some pain for names like Genuine Parts, down over 20%, and Rivian, off 14%. Blue Owl Capital and Okta also took hits of around 13%. These weekly declines might spook short-term traders, but for us, they could be a chance to scoop up quality at a discount if the long-term thesis still holds. Always dig into the why behind the drop. Sector-wise, industrials topped the charts this week with a 2.1% gain, followed by consumer cyclical stocks, up 1.6%. Energy also had a standout week, climbing over 4% despite today's oil price drop. These sector moves reflect broader economic optimism, especially in cyclical areas tied to growth. For long-term portfolios, having balanced exposure across sectors can help weather shifts like these. On the weaker side, healthcare lagged with a 0.6% drop over the week, while utilities and financials also underperformed slightly. These defensive sectors often struggle when risk-on sentiment takes over, as it has lately. For us, it's a reminder that not every part of the market moves in sync. Diversification is key to managing these ebbs and flows. Wrapping up the market action, the S&P 500's V-shaped recovery is a strong signal of bullishness across multiple timeframes. Analysts are pointing out that the index is trading above key support levels, suggesting more upside could be on the horizon if earnings deliver. For long-term investors, this kind of technical strength can reinforce confidence in staying the course, even as we brace for potential volatility from geopolitical or liquidity risks. Similarly, the Nasdaq's tech-driven rally, up nearly 2% today, shows that innovation and growth themes are still very much in play. With the index eyeing its best run in years, it's a cue for us to ensure we've got exposure to tech leaders while keeping an eye on valuations. Overpaying can hurt even the best long-term plans. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate your investment journey. Be sure to stay engaged with our daily summaries and dive into our SWOT analyses for deeper insights on the companies and trends shaping the market. See you tomorrow for more actionable updates. Keep building that wealth.